Just to sort of place the oil shock, yeah, I hope it is a temporary one, but we have to anticipate or at least plan for persistence. The macro situation with growth being 7 plus, inflation being about 4 around the 4 mark, maybe oil will push it up a little bit. And most importantly, the current account deficit being below 2.5% of GDP. It's a relatively robust position in which a shock is to be dealt, or a shock can be dealt with. This is quite different from the situation that we faced in 2010 when oil went from the 50s and 60s to over 100. But we're also hit with a number of other current account shocks. We had to import lots of coal. We stopped exporting iron ore. We were importing enormous amounts of gold. So our current account deficit at its peak was 4.8% of GDP, and that's a high vulnerability situation under any circumstances. And oil at 110, 120 was massively sort of complicating things. So now the question is, where is oil going to go? Why is it going where it's going? And whether some of these factors are sort of temporary in nature and can be, can a reaction or response happen that will keep the price in check? So we have basically growing demand. That's good news in terms of oil demand. That the global economy is growing faster now than it was in the last 2 or 3 years. The IMF forecasts are quite optimistic. 3%, 3.5%, 3.7% for the global economy, which is the fastest 2-year period since the crisis. On the supply side, we have complications with Iran and Venezuela, both very large contributors to the global pool. We have the production compact between Russia and Saudi Arabia that has contributed to prices going up. And we have, at this point, less than expected supply response on shale for a variety of reasons. So I think at least 2 of these factors could kick in to cap the price increase. Saudi Arabia and Russia are already talking about moderating the surge, so more production. And shale may come back in a slightly more expanded way. But there are, I think, differences in the shale economy compared to 5 years ago. So I'm not so sure that the response is going to be equal. Environmental regulations have become more stringent and so on. But Iran and Venezuela will presumably stay out of the market, or at least be smaller contributors to the global pool than they were in the last year or two. So the supply situation is going to be tight, but if things remain in the 70 to 80 range, given the macro conditions that I described on growth, inflation, and the current account, I don't think the shock is going to be unbearable. I don't think the macro impact in terms of lower growth, higher inflation, and expanding current account deficit are going to be very significant. Goes to 100 plus, all bets are off for everybody. But I think the supply scenario does suggest, as I said, both from the viewpoint of Saudi Arabia and Russia starting to gain some or exercise some control over the price increase, and shale coming back in a somewhat bigger way. I think the expectations are that prices won't go very much beyond the current range. If they stay where they are, a little bit of damage to oil importing countries, but very manageable. If they start to approach 100, I think governments all over the world, not just India, will have to start rethinking their macro scenarios.